Welcome back to the Trader Vision 2020 video tutorial series. My name's Ed Carter, and in today's session we'll be talking about setting your trading goals. In particular, we'll be talking about setting SMART trading goals. SMART's an acronym which stands for specific, measurable, achievable, realistic, and timely. We'll talk about creating a plan to reach those goals. In other words, breaking those goals down into actionable items. We'll show you how you can realize that you don't have to have huge trades, so you can trade small and still achieve your goals. And finally, we'll talk about how you can use these goals and their subcomponents to manage your trading. So with that said, let's get started. When you open Trader Vision for a new account, this is what you will see. No goals have been set yet for this account. You click the Create New Goals button, and it will fill in the account balance for your new account. It defaults to weekly. I prefer to plan mine in monthly so that I can use a one-year time frame, and I can then break the one-year goal down into monthly goals, down into per trade goals. So let's set a goal balance in the yellow area here for the end of some period of time. I'm going to say $125,000 because this account happens to start at $100,000. I'm not going to be doing any additional monthly deposits, and I'm going to give myself 12 months to reach this goal. Now, how did I come up with that 25% or $25,000 over the course of a year? That's a good starting number for somebody who has a little bit of experience as a trader. If you have a lot of experience, you may already know what you've done in the past, and you can give yourself a goal that's a little bit of a stretch but still realistic. If you have no experience, I would say that 1% per month would be a good starting goal, and then you can add to it or replan your goals once you're able to achieve that 1%. I've known traders who have started out with assuming 10% goal per month, and that's a good way to destroy your confidence and just be unrealistic in your goals. I will tell you that if you are able to achieve 4, 5, 6% per month, you're certainly among the elite of the elite traders. Just don't believe all of the email marketing that you receive where somebody tells you that they make 200% per year on a consistent basis. That just does not happen. Sure, you can have individual trades or individual years that are outstanding. However, on a consistent basis, you want to plan with a realistic number. Like I said, I would start with a moderately experienced trader, something like 25% per year. If you can achieve that for a period of 2 or 3 months, you can always replan and set a new set of goals that stretches you even further. If this 25% seems too much for you, you can either reduce the goal balance, give yourself more time to reach it. So if I give myself a year and a half instead of a year, that reduces down the per month amount I need to make. If that seems too conservative for you, cut it down and give yourself less time to achieve that. But for now, I'm going to leave that at 12 months to reach that 25% goal without additional deposits. That tells me I need to make about 1.88% per month, which includes the compounding. The next thing we need to do is create a plan which will help us reach that goal. In other words, break that goal down into per trade parameters. If you had a trading history inside of Trader Vision, these numbers below the fields would fill in with your historical values, your average historical values, and that would help you plan. But since we do not have that in this brand new account, let's just fill it in from the beginning. Let's start with saying I want to have a $400 average win size, and just using 2 to 1, let's say I can keep my losses to an average loss of 200 per month. if I can win 60% of my trades, and I can trade, I don't know, 8 trades per month would be 2 trades a week. If I can achieve these parameters, I'm still going to be far below, about 7% below reaching my goal. You can see that the goal is the yellow line. The plan to reach that goal is the orange line. And in this case, because my plan is less than my goal, I've got a red discrepancy shown here. On the graph, the dark gray is historical values, the light gray is projected performance based on historical values. And it just gives you an idea of what you can work with. So what can we do to improve these 4 parameters to help us reach this seemingly reasonable goal of less than 2% per month? Let's say we can raise our average win size to 450, keeping our loss size the same. That doesn't help us as much as we would hoped. So let's see if we can't reduce our average loss size to $175 on average. That's helping us. Perhaps a couple more trades per month, and at a couple more trades per month, we have now reached the point where the difference between our plan and our goal is green. In other words, if we can achieve these parameters, an average win size of 450, our average loss size is 175, win 60% of our trades, and trade 10 times per month, we will exceed this 1.88% per month gain by 1.5% essentially. That could be okay for a starting point, so let's leave it that way and see what else we can do here. The next thing that we need to figure out is how much of our account are we going to put into each trade. I think a good rule of thumb, and you'll see this elsewhere on the internet, is about 3%. If you can keep it slightly less than that, that's okay. I would not recommend going much larger than that, and the reason for this is something called the risk of ruin. In other words, how many trades in a row would I have to be completely obliterated before my account is wiped out? The lower you make the percent of your account in each trade, the more leeway you have, the more cushion you have for those bad trades or bad months, bad string that won't wipe out your account. You might be able to tell that this is a yellow background because I've got it 3%. If I go less than 3%, that gives me a fine no color at all. But if I take it, for example, to say 5% of my account per trade, it turns red because that's just too large. But let's keep it at 3% for now. That would be $3,000 per trade. I'm only going to be doing 10 trades per month, so you say, wow, that's a lot of your account sitting at cash. Even if I did all 10 trades the first day of the month, that's only $30,000 of our $100,000 being put into the market at risk. And that's true. That's the job of a trader, to achieve their goals with the least possible risk. The goal of a trader is not to take the most risk possible to get the highest gains. Your job is to make your goals with the least risk possible. Under these parameters, taking a $3,000 trade size, we would have to have an average across wins and losses of plus 6 2/3%. And that would require an average trade, again, including both wins and losses, of plus $200. That seems quite reasonable and very doable. So for now, let's go ahead and save these goals. Let's now talk about how we can use these parameters to help us manage. If we know that our plan requires us to make $450 on average, and we're considering a trade, and it does not look like we'll be able to pull $450 out of it before we hit that first major resistance, that's probably a trade we should pass on. Likewise, if we have a trade where, sure, we can get the $450 off before we hit the first major resistance. However, our risk that we're going to have to take to be able to stay in that trade will be, $300. We probably want to think hard about whether or not we can either set a tighter stop to reduce our risk, or pass on the trade altogether and look at a new trade. Again, these parameters will help us not only validate that the chart we're looking at is something we want to trade, but then once we plan our trade out, we want to plan to take that $450 off the table as soon as possible. Again, the goal is to achieve our goals and consistently win, not to hit a home run once every 10 trades. So what we do is take that $450 off the table at a target and let the rest of it ride while raising our stop. That will allow us to both achieve our goals and continue to profit if the trade continues to work in our favor. Just remember, your job as a trader is to continue taking profits, to plan good trades, and then trade those plans. So those numbers can help you tremendously. Again, by taking these trades that are stacked in our favor, we will also start to increase our win ratio. And you can see that as we increase our win ratio, we very quickly get to the point where we're exceeding our goals quite a bit, and then we can raise our goals. So as we save this, it's saved here as January 28th. If we come back here, the end of March or end of April, even in June, whenever, we come back sometime in the future and we say, well, we've been achieving that 2% per month consistently. It's time to raise our goals. We just plan another set of goals, save them again, and it will be another blue plan dot out here, or goal dot, and date. However, you can always go back in time and see what the goals and plan were, and you can see your progression over time of your performance against your plan and against your goals. So that is all we need to really talk about in this video. In our next video, we'll be talking about validating trades, and after that, planning trades. So we're really getting into the heart of Trader Vision at this point. I want to thank you for your attention and your time today, and look forward to that next video in a day or so. Until then, if you need to reach me, you can always reach me at ed@tradervision2020.com, or of course support@tradervision2020.com, and you can also use the in-app help support ticket function, which will alert me as well. Again, thank you for your time, and I look forward to talking to you next time.